Hello, this is Charles Biederman Sear, January 28th, 2026. So a seer is someone who sees what is happening now and predicts what is likely to occur. What is happening now is stocks are still at around all-time highs in price and also in relationship to value and earnings and book value and stuff like that. And Bitcoin is currently down 10% or so from its high. The US dollar is turned weaker while oil prices are slumping. Individual investors remain very bullish by continuing to pour lots of new dollars into stock exchange traded funds. Inflation is also somewhat higher at the current 3% annual rate than the reputed 2% target. The Federal Reserve is unlikely to drop interest rates anytime soon, while the job market will remain weak given the slump in immigration, and particularly where deportations remain high. So I remain short-term neutral and longer-term bearish. As long as individual investors keep using extra cash to buy stocks, the market should remain stable. Yes, the artificial intelligence AI boom is a very positive development, but it is still quite early. Why I say that is billions of additional investments dollars is being planned by all companies, new and old, to mine this boom. The potential problem is when the first AI bust hits a previously hot stock, but that could be sometime in the future. And that's why I recommend ABFL ETF, which owns companies growing free cash flow and using some of that new cash to reduce shares outstanding. I still believe that the coming bust in cryptocurrency will be the big financial story of today that will be remembered for decades to come. Why? The simple answer is that there are two real risks. First, crypto has no inherent value. Crypto by itself does not generate any cash flow. And if crypto buyers stop buying, there will be no bottom to the downside because there's no value, no cash. Second risk is technology. Yes, the algorithms behind crypto could be corrupted by some new AI event that will enable thieves to steal crypto from previously thought to be safe holdings. So historically, a nation's economic growth is fueled by the growth in the labor force, growth in technology, and growth in incomes. Yes, technology could be at a major breakthrough equal to the impact broadband internet had on global prosperity in the early 2000s. A real problem not yet slowing growth is the cessation of money printing by the Federal Reserve. There is no doubt trillions of new money was used to put a bottom under the COVID economic pandemic. But the Fed has stopped printing money. But for now, individuals are not only playing with the extra money, but are reducing savings to keep adding new dollars to stock and crypto markets. A long-term problem impacting Japan, China, and the U.S. is a declining birth rate and the U.S. shrinking and the growth of the labor force. A lower birth rate plus deporting illegals has to slow economic growth. Then there are the increasing tariffs, which means higher taxes being paid by consumers, and that also will slow growth. Will technology in the form of AI overcome higher taxes in the form of tariffs, reduce money printing, and low labor growth? I don't know right now. I doubt it, but we will find out shortly. And that's why I am neutral over the near term. Thank you.